Apple stock is up 50% year to date. How is this even possible? The stock's at 186. It hit a high of 198.22 back on July 19th, and the low was January 3rd of 123.81. Guys, Apple stock, this is a company that's got a lot of attention because Warren Buffett owns it. I personally believe he's buying around 140. It's a company that he's advising Tim Cook very hands-on on what to do with the amazing amount of cash flow the company generates. It generated $101 billion in free cash flow in the last year.
So guys, I do own Apple shares, but again, don't buy them just because I bought them. You have no idea what price I paid for them, when I bought them, why I bought them, and we are all in different situations.
So if you want to learn about Apple, we're going to go over some news, some bull and bear cases from our community. We're going to go over some analyst estimates. Of course, we're going to cover our 8 pillars on Apple, and we're going to finish it off with probably the question that you're wondering is how much to pay for Apple. We're going to use our stock analyzer tool to do that. So in this video, we're going to have things for beginners and advanced investors and everything in between. So no matter where you are in the spectrum of investors, stick with us the entire time. You'll learn something. Even if you're the most advanced investor in the world, it's important to reiterate these things. And remember, if you're early and beginner in this and it sounds confusing, that's okay. It was confusing for me. It was confusing for the other 200,000 people who subscribe to our channel at some point, but you got to learn somewhere. So stick around. Let's get into Apple. First things first, the market cap for Apple is $2.93 trillion. This means if you wanted to buy every share outstanding on the market and own 100% of the shares, you'd pay $2.93 trillion. Now, if you wanted to buy the company free and clear of all debt and all cash on the books, you have to pay $3.15 trillion. So essentially this difference between market cap and enterprise value is their net debt, taking their total debt, subtracting out their cash. So not a lot of debt in the company, which is awesome. Okay, debt works for a company like it works for you. All right. If you have a ton of debt, you're more likely to have problems when problems occur. All right. Net income in the last year, $95 billion. And like I said, free cash flow of $101 billion. So I like the fact that there's more free cash flow than net income. And the 5-year average net income is about $80 billion. And their 5-year average free cash flow, $87 billion. Mo, how do you spend $85 billion a year?
Buy a lot of planes. I have no idea.
I don't even think $100 billion of planes are ordered every year.
I don't know.
Actually, that's a pretty interesting question, Mo.
Yeah.
How many commercial planes are ordered per year? In 2021, there's about 1,700 planes ordered. If the average plane is $100 million, yeah, it's over that. But still, that's a lot of planes either way.
Yeah, it is.
Right? Okay, That's pretty good. All right, the 1-year PE is about 31 for Apple. Now, guys, this is a high PE, but one of the things we try to do here on this channel is to realize that a company like Apple with a great moat and a very high return on the money invested in the business, they can generate a lot of cash by reinvesting in the company. If they don't have a lot of things to invest in, because Apple's a huge company, it's hard to move the needle, they can return that money in some way to shareholders, either through dividends, which they pay about 0.5%, or buying back shares if the price is low. Okay, so you should be willing to pay a higher price for a big moat, a high return on capital, and a lot of excess cash they can return to investors in some productive way. Right, Mo?
Mm-hmm.
The 5-year PE is 37. Okay, whatever. But here's what I like. Very consistent profit margin.
Yeah.
24% in the last 5 years, and last year they did 24.7%. And their gross margin, 43.4. All right? So they pay taxes, and they pay with 20% of their revenue, they pay taxes and their overhead. That's the difference right here, essentially. Taxes and overhead. All right. That's a pretty low number, right?
Yep.
All right. So we talked about the dividend here. Let's go forward on some. Do you have any, what was that?
They're buying back a lot of shares. Well, they're buying them back every year, regardless of situation.
Let's go quarter to quarter. So are they listening to our buddy or not? Yeah, they bought back 9 million shares in the last quarter, 10 million in the previous quarter. Sorry. No, that's wrong. 1 billion, 100 million. Yeah, 9 million, 10 million. Okay. That's not a ton, but I just don't like companies overpaying. Remember, when a company has your cash, they're required to be good stewards of the money. And when they invest the cash in other businesses or themselves, it's the same thing. Buying back your own shares is the exact same thing. I'm listening to this great book, and it talks about Tom Murphy. The Outsiders is a great book as well. It talks about Tom Murphy, who Warren Buffett loved at Capital City Enterprises when they owned a bunch of stations. He was either acquiring other companies or buying back his shares. And the caveat is when the stock was cheap. Because you're giving your investors a reward for sticking with you and giving them a bigger piece of the company. If a company has 10 shares outstanding, you own one, you own 10% of the business. If they buy back 2 shares, you still own your one, but now everything's split amongst 8 shareholders. You now own 12.5% of the business. And if they can keep buying back shares and you stay as a very good investor, being patient, you're going to own a bigger and bigger piece of the company. All right. Let's go to the 8 pillars before we get into some bull and bear cases. Mo, look at this. Our favorite. Yeah. And guys, remember, if you're part of our community, you can customize your 8 pillars up to 12 different pillars and like 4 quadrillion variations. But guys, everything's a check except for the 2 valuation metrics. But I like the fact that the price to free cash flow is lower than the price to earnings. Because usually it's the other way around. Usually companies are showing more earnings than cash flow coming into the business. So the question is this a reasonable price or not? So Mo, let's go into our community. And we're going to go into the Apple chat and see what people were saying about Apple, at their bull and bear cases. You want to go over some of their, there's a lot of comments here.
Yeah, there's a lot of comments. You do that. I'll look at some bull and bear cases. So today is September 6th. So next Tuesday, I believe it's the 12th, they're going to be announcing their new iPhone 15. I'm pretty pumped. Are you?
I couldn't care less. I'm not going to get the iPhone 15.
I'm buying a lot.
Are you buying a box full? Are you buying a container full?
Giving them away. Yeah. The new things that are supposed to be coming out. Let's go to macrumors.com. So the biggest thing is going to be the USB-C. There was some big lawsuit that happened in the UK, and it's basically saying you guys need to go to a USB-C. So I'm very happy about that because I have to carry like a bunch of different chargers. So now this consolidates it even more. They're going to Wi-Fi 6E, which is pretty sweet because the phone's going to be faster when it's connected to Wi-Fi. That's about it. It's really not a lot of changes. Those are the 2 big ones that are coming out with that. Here's a bear case, and this is what I was talking about with the a new European Union law requires all mobile phones, tablets, cameras to be sold with a USB-C charger. So that is going to be.
Why is that a bear case?
Because Apple kind of had they had their own charger, something different than the rest of the world.
Oh, so they forced people to buy
people to buy their products. So now, like, you can use any USB-C.
Yeah, maybe you're right.
I don't know. I always liked it, but now that they have like the iPad has USB-C, iPhone has a Lightning cable. I hate that.
Yeah, that's true.
Just leave them all Lightning or something if you want to do it.
And the USB-C is also on the iPad Pro that I have. So like Lisa has it. What was that?
It's on this.
Yeah, correct. So Lisa has her iMac, and I can switch it on and off.
Yeah.
So in our community, we have quite a few comments. One is from Ali. So Ali says Apple's revenue, about 50% came from iPhone sales, and about 20% of sales came from China. Currently, China is facing economic slowdown, so I think the iPhone 15 will be impacted. Maybe. I don't know if I agree with that because China's still a fast-growing economy, and their slowdown is still growing. Like a slowdown for China isn't a contraction. It's just lesser growth.
And I think there's way too much emphasis put on iPhone sales per quarter. Like, it's ridiculous. That's all you hear about from the pundits out there and a lot of bull and bear cases. It's just dominant of what their sales were for the quarter on iPhone. It's like, I don't think that's the biggest driver in the whole world. Do you? It's important, of course.
Well, I mean, it's
fluctuating a couple.
Well, I don't think for me, I don't look at it as what's the quarter to quarter fluctuation.
That's
yeah, I mean,
point.
Of course. Let's see what else we got. Let's see.
Like that pullback in price of Apple after their earnings was totally dominant on the conversation of iPhone sales.
Let's see. Debt is over 6 billion. Cash is only 35 billion. I don't think that's accurate. Oh, that's a different company. Sorry, somebody's selected in there.
Watching closely for the success of iPhone 15, the price of the iPhone keeps increasing in Europe. It's supposed to be more expensive this year. I have heard that iPhones over there are quite expensive. I should check that next time I go.
Nate P says at 3 trillion, basically Apple's going to have a very hard time doubling. Great point. It's basically, so I agree with you, Nate. However, you got to remember, a company's market cap can stay the same and the share price can still go up. via buybacks. Look at NVR. Their market cap didn't stay the same, but the stock is up 100 times and the market cap is up like 30 times or 20, something like that. It's not because if you buy back enough shares, you're driving up that earnings per share. Why? Because you're decreasing the number of shares that those earnings and free cash flow are divided into.
That's probably what Tim Cook is realizing at this point.
Well, he's learning from Warren Buffett saying, hey, listen, if you want to give your investors a good return, if the stock gets cheap because people are going like, this is a bond, you just keep buying those shares back. And eventually the earnings per share will keep going up and up and up and up and up. And that'll drive the stock price to follow, right? Of course. So let's see here. I don't like their valuation premium and their ridiculous dividend. This is from Nassim. He's a very active user on our community. And their secretive R&D and the ever-lingering doubt as to if they can sustain the innovation, the moat. R.I.P. Steve. You know what, Nassim? The company's done incredibly well since Steve Jobs left, since he passed away. And I think that was in 2012 or 13. It's done an incredible job since then. I think Steve Jobs did a great job of putting, no pun intended, putting the right people in place that could continue on what he believed in Apple, being a very strong product development business. So I don't know if I agree with that.
I actually don't know if Apple would be in the financial situation they are with if Tim Cook didn't take over. Because I think there was a great, he was a hell of an innovator, Jobs.
So ScaleX says, bull case, 30 of 45 analysts have a strong buy rating on Apple. I couldn't care less about that. ROIC, it's huge. ROE is huge. 3-year cash flow CAGR is big. Guys, it's incredible. Now, Wicked Willie is our analyst that's starting October 1st, who's going to work for us. New Apple Watch. They're making the Apple Watch more of a even better lifestyle kind of watch.
Oh, that's cool. They're also not mentioned there is the iPad. They're going to be switching allegedly to more of a laptop type device. So give you the option to use it as a computer and a iPad. All
right. So guys, who are we giving this to?
You choose.
I'm going to choose. I'm going to give it to Nassim because even though I don't necessarily agree with them, he's very active in the community, and I want to give him a thank you for always commenting on. I don't agree with him on this one, but at the same point, Nassim, thank you very much. Mo,
here you go, buddy. You get a shirt that says Everything Money. We'll send it to you.
Yes,
and everythingmoney.store if you want to get some merch.
All right, so let's go back to Apple and take a look at the analyst estimates for Apple. So look at this, $6.16 per share in the year ending September 2023, going to $8.75. Not big growth, high single-digit growth, as you can see here. All right. Probably a large part of that is going to be driven by if they can buy back cheap shares. But revenue, look at this. I'm actually surprised by this. Look at this revenue growth that analysts expect. Mid to high single digits.
It's pretty big.
Yeah, I'm actually very surprised by that. Mid to high single digits. I don't know if I agree with that. It's such a big company, but if GDP can grow at mid to high single digits, nominal GDP, not real GDP, guys. Nominal GDP, that means adding back in inflation. So if you have real GDP of 2.5%, but inflation's 2.5%, you have 5% growth overall, 2.5 plus 2.5. And big companies like Apple should be able to grow with GDP. And as the world grows at a faster pace, their income internationally is going to grow at that faster pace. So maybe it is possible. All right. So that leads us to our final thing that we want to ask. What's the price? Oh, look at Apple. It's down $5.50 today.
Yeah, I saw that.
2.9%. Our stock analyzer tool. Guys, this is the tool that's so popular, used 2 million times since we started keeping track. It allows us to make assumptions about the future and tell us what price to pay for the company based on those assumptions and excludes the balance sheet. So guys, one thing we want to tell you about, if you click the link below, there's a free webinar. Next Tuesday, September 12th at 2 p.m. Eastern Time, we're going to have a webinar on trading, how you can make money regardless of what the asset's fundamentals are. Doesn't matter what it is, you can trade it, make money in up and down markets, being active, and can help you be more patient. So sign up below for that webinar if you want to learn about a new way to trade. Mo and I both trade. It's a lot of fun. So let's pull up the last time I did Apple. I'm going to go to my history in my stock analyzer tool. August 3rd, 2023. Let's see if I still agree with my assumptions here. So Mo, on a 10-year analysis, we did revenue growth on the low side of 4, middle 7, high side 10%.
Okay, I have 5, 8, and 11.
Okay. So yeah, I actually feel like I'm going to stick with the 4, 7, and 10? Are you going to stick with your 5, 8, and 11?
Yeah.
All right. Profit margin. I did 21, 23, and 25%. 21's kind of low. I actually don't like the fact that 21's there, but it's fine. I mean, if they lose some margin, if they lose some, if the growth isn't as big as they want, they might have to cut down prices and decrease some margin, spend some more money on advertising, et cetera. What'd you do?
I put in the same number, but the only thing is, like, they're definitely moving to more of a subscription-based business, so that's higher margins there.
That's true.
That's why I'm thinking maybe go higher.
Okay, I'm not.
Because I had the same numbers.
Okay, I'm gonna go high. I'm gonna go high end. Maybe I'll do 26.5%. Now for free cash flow, I did 24, 25.5, and 27. But maybe on the high end, I'll put 28.5 on the free cash flow margin. Because like he said, subscription-based business is way higher margin than typical just buy products, et cetera.
Right. I did 24. I'm gonna go 27 and 30.
Okay.
Okay.
Now for PE, what's the PE that you're willing to pay or that you think it'll be selling for in 10 years at the end of this analysis? You start at 15. That's the market average. But obviously, you should pay more for high-quality businesses with a high return on invested capital and a lot of growth rate. They don't exactly have the growth rate, but the high moat, high return on invested capital is incredible here.
Yeah.
I put 17, 21, and 25.
I did 16, 20, and 24.
Okay. And for price of free cash flow, I did the same thing, 17, 21, and 25.
Yep. I did the same, 16, 20, 24.
All right. Our final numbers. What desired return do you have? You can get 9 or 10% from investing in a long-term ETF. So what return do you want to own this company? Obviously, the higher your assumptions, the more return you should get. That's your margin of safety. I put 9% on my low side because I already feel like I beat it up pretty nicely. Mm-hmm. I put 13 on the high and 11 in the middle.
I did 10, 12, and 14.
Okay. I'm so surprised by that. I thought you'd have done lower.
Yeah.
So guys, I'm going to hit the analyze button. Now remember, I don't want you guys to stick with me for 1 or 2 minutes longer. We're going to go through our numbers, each of us, explain them, just 1 or 2 minutes, but it's important you understand what the numbers mean that pop up below and what you can do with them. So I have a low price of 90 to 100, high price of 175 to 187, and a middle price of 125 to 135. It's on my watch list at 125. I think I'm going to change that. I think I'm going to add, I'm going to put this at 135 on my watch list. And guys, if you notice that as time has gone on, my price has gone up for Apple. Now it's on my watch list. So in my software, my community, it's going to notify me and it's going to send me an email when it hits my watch list. If I pay today's price of 184 and the lowest assumptions occur, I'm going to make about 1.6%, including dividends. If the middle assumptions occur, I'm going to make it 7%. And the high assumptions occur 13.2, but that's paying today's price. Mo, what'd you get?
So I got 92 to 100 on the low end, 179 to 191 on the high end, 130 to 140 in the middle. And it's on my watch list at 150. And the reason for that is I want to be able to sell puts around 140, 130. And I think that if it gets to 150, I'll get enough squeeze.
So I think I'm going to change that to 140 now that you mentioned it, just so I can start putting some puts on there.
Yeah.
All right, guys, thanks very much. Sign up for the webinar below. Appreciate your time.